afternoon, ladies and gentlemen. Happy FOMC day. I know for a fact all of you guys are having a great day so far with Starbucks, the China trades, Nike, so many of these other epic trades coming out over this week. But guys, what can you expect from me out of this point? I feel like we know the deal now. So obviously, we're going to have potentially a very volatile rest of the day. We're going to go over probably a few times exactly what I'm kind of looking for out of Powell here. My thoughts, I did kind of tweet out my initial thoughts on kind of where the kind of state um, of what's going on in just kind of monetary policy is on Twitter. Again, we'll talk about that a little bit as we start to see you guys filter in here, so I don't have to say it 8 million times. But again, guys, congratulations to all you guys that are in the private mentorship group there. Again, Starbucks is printing, those Nikes are printing. What, the Alibabas and the PDDs were really good this morning. What else? Yesterday I think we had some more multi-hundred percenters, like 1,000 percenters last week on BYON. Guys, it has been absolutely phenomenal. But team, it is that time of day. Again, say good afternoon to somebody in the live chat if you guys would like to say good afternoon to me. I'd love to receive some good afternoons over here. If you guys are new to the channel, new to the private group, let me know. I'd love to welcome you guys to the stream here. And as always, ladies and gentlemen, it is a public stream, so make sure you guys are hitting that like button on the way in. Costs you nothing to do it, but it helps me out a whole lot in spreading these streams out to as many people who actually want to learn. Again, you guys have probably seen this. There's a lot of nonsense out there. Just kind of in the space that we're in here. You guys are in the right place. Let's get after it. Make sure that we have, again, the most accurate information and analysis going forward so that you guys can go and use that information to make yourself some money. So let's see what we got in here. I haven't even looked. I bet there's a lot of slackers on the like button over here. Let's see. We have Gerald, Daily Taylor, Michael. We got Aeroless, Yeet, Romeo, Surge. We got Weak Sauce. We have Wreck-It Ralph, Rycack, Be Free, GC, Rogue, Eddie, Andrew, Dumpsit, Garrick, GC again, Yuki. Good morning, ladies, or afternoon. Sorry. Do you think the Fed will listen to you, Trump? Yeah. Yeah. All right, guys. No slackers on the like button. Let's see. So we did get this NVIDIA news, or it was really Trump news talking about NVIDIA restricting some more of these chip sales to China. Again, that's kind of already known. So obviously NVIDIA did not like that, took down the whole market with it there for a little bit. But a lot of the names that we were in obviously did not care. Starbucks didn't care. Nike didn't care. Capri didn't care. Rocket just kind of doing its own thing over there, looking pretty good. But let's see here. How we doing? Oh, Mike printing money on Apple. There you go. Yeah, I did make that bottom call on Apple. I actually kind of want to see where Apple is right here. I don't know where it is. I just know I called the bottom on it like last week. So where is it? Yeah. So if you guys have followed me on Twitter, called the bottom on this day on Apple, and you guys can see what happened after that. You guys can just go scroll around on my Twitter account and look. So all right, team, let's see. Once we get to like 50 likes on the stream, I'll start going over kind of the expectations for what you guys should be looking for the FOMC. So again, make sure you guys are hitting that like on the way in. But yeah, let me pull this up over here to just kind of give you guys a little bit of I don't think this is going to take you guys very long to do this. But let's see. Yeah, we have some announcements again, obviously, about the private mentorship community there. Those of you guys that are in there, you guys know the deal. It's been absolutely phenomenal. Apple is actually giving us a pretty good setup here, but it does have earnings tomorrow, so we're not going to be able to do anything with that. Bond market looks interesting here, guys, again. So the bonds are starting to look very, very, very interesting. So we're about 18 likes away from starting to cover everything that we need to, getting you guys ready for the interest rate decision, which is there's going to be no change, in my opinion, to the federal funds rate this time around. It doesn't make any sense to do so. Well, let's see here. Let's see here, team. We're going to be having some fun today. Well, we got a lot of you slackers in here. So, yeah, 15 more likes. Get it up to 50. Then we'll start kind of going over everything. Yeah, Nike looking really, 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 really good here. So we're going to see how this can end up playing out. Shout out to those of you guys that are in that Starbucks post-earnings trade. Again, I posted that video for you guys last night. I don't know how to make it any easier for you guys. 5-minute opening range break, blast off to the upside. I know a lot of you guys are in this one making money. There you go. Very, very, very simple strategy there, guys. You literally you'd almost have to try to lose money doing the stuff that we do. Purple tie day. It could be interesting. Yeah, it could be a little purple tie day. So I'd love to see again Capri. Ever since we've entered this one, this has just been up and to the right. That's been really solid there. RKT again. You guys know the deal with this one. I've got like 2,000 shares of this thing sitting around this area. So we will see what happens. Ooh, 8 likes away from starting to cover it here. So yeah, it's going to be very interesting. I think you guys are going to get a lot of value from this. Again, there's nobody really in the space that I'm in. I'd call that kind of the mainstream trading space that is able to kind of tell you guys these things. So it's just because, again, it's no fault of their own, but the problem is that they're not really going to be able to give you guys those real tools to have long-term success in the market, just because like you have to understand the big picture if you do want to have long-term success. There's no if, ands, or buts. That's just there's right ways to do things and wrong ways to do things in the market. So let's see. The Discord prints money. If you're serious about leveling up, join. Best Discord on the planet. Thank you, GC. I appreciate that, buddy. Yeah, I mean, we'll talk about it in a little bit there. I'll give you guys the details of the 50% off your first month. It's literally only $30. And then like when prices are going up. So we'll talk about that a little bit later. But yeah, 6 likes away from being able to talk about just waiting for all you guys to filter in here. So I don't have to repeat myself, because that does get annoying, having to say the same things over and over and over again. So when's the next rate decision after today? I think it's March. I think they skipped February, but I could be wrong. We might have a February meeting. Yeah, it's March. Next rate decision is March. Can't wait for Trump tweets after he finds out they didn't lower rates. It's going to be epic. Well, he's not going to cut rates, guys. Powell's not going to cut. Powell and Trump also don't like each other. So we're going to see, man. It's going to be really interesting. So again, ES kind of still reacting to that NVIDIA news. What was interesting about this movement here, guys, is that like they just jacked up premiums again on everybody before FOMC. Like they were already inflated, and now they're definitely very, very, very inflated. Oh, 2 away for us to be able to start talking about the important stuff here. Who are going to be those lucky last 2 people? Let's see. You want to close the F indoor moment? Yeah, we'll get one. Okay, yeah. So we're going to cover everything for FOMC. I'll give you guys some more details about the private mentorship group, and then we'll kind of go from there. So 2 more likes, then we'll start talking about it. Yeah, we're going to cover the tweet. We're going to cover kind of everything else that's been going on, and just kind of how the Fed is being very intellectually dishonest with everything, which is very, very, very important to know, because people just aren't getting this. They just are like, oh, well, it's tariffs, inflation. It's like, no. You gotta think a little bit differently here. Did I give away that car, dude? You guys in the car giveaway jokes, the car giveaway and the ankle jokes are always funny. They're always funny. All right, guys, we hit the like threshold. Thank you, guys. Again, you keep doing it. Don't ask much of you guys. Just hit the like button. That's it. So let's kind of go through this tweet a little bit here. We're gonna break down every single different part of it here so that this makes sense. Kind of what we're looking for going into the FOMC meeting today. So pre-FOMC, like the action that we're seeing this morning, does not really matter. My view is this: the market has overpriced the inflationary pressures of tariffs. And obviously overreacted to the 100 basis points of cuts in 2025 when the Fed moved that expectation down to 50 basis points. So they basically said before in September, we were looking at doing 100 basis points of cuts, which is 1%, in 2025. Now they've moved that down to 50. The question that needs to be answered is, do you think it's more likely that rate cut expectations go down to, let's say, 1 rate cut or 0 rate cuts for the year 2025? Or is it more likely that those types of expectations begin to trend to the upside? Obviously, I think that those the higher likelihood outcome is that they start to move back up. Why? The Fed has started being overly political, inciting inflationary pressures from tariffs and failing to account for the other side of their dual mandate, which is employment. Okay. So in the last meeting minutes of the FOMC, they cited tariffs and tax policy as being inflationary. And they thought that those pressures were going to drive basically all like prices higher. And what we've seen so far is everything that we've been saying here, and a lot of what some of these other people have been saying is like, well, the tariffs in and of themselves aren't that important. They're bargaining chips. You just saw a news headline come out today that supports this. You saw, I think it was, who was it? I forget exactly who said it, but they said that if Canada comes out and starts to take steps towards not allowing fentanyl to come into the United States, there's not going to be any tariffs. Okay. So it's just a bargaining chip. Are these tariffs going to be actually inflationary? Well, according to the dumb PhDs at the Fed, yes, they would be. And that's what they're going to price into their expectations. But that creates a lot of really good opportunities for us in the market, because the bond market is going to pendulum swing all over the place. And you guys have seen that happen time and time again. The other thing that you have to think about is the labor market. Okay. So if government jobs and those government job numbers are going to go down. Jaguar Analytics was talking about this. I've been talking about this for a while too. What does that do to non-farm payrolls? If there's less people, oh, it was Lutnick. Okay, cool. If there's less people working in the government, remember a lot of the job gains, full-time job gains, which there haven't been many, but a lot of them have been in government jobs. Okay. So if that number starts to go down, it decreases non-farm payroll numbers and increases unemployment. That's deflationary. Okay. So what the Fed has effectively done with their last FOMC meeting minutes and what they did at the last FOMC meeting is cherry pick data, and they're being intellectually dishonest about what's actually happening in the marketplace. And that's why I've been telling you guys over the last like month here that it is very, very likely that bond yields were topping. I think this was the day that I tweeted this, Friday, January 10th. I was like, yeah, start looking for the top of the bond market. It's about to be done. So that's what we've seen so far. Now, I know a lot of you guys are then going to think to yourselves, well, okay, so just quick, the main thing that you really want to look out for today in the FOMC meeting is comments on the labor market and the hiring freezes and in all of that. I personally don't care what the Fed says about tariffs. I really don't. Because if they want to stick to their guns, that's fine. It doesn't mean they're going to be right. Okay? It's like they could say one thing and I'm going to stick to my argument there because I think my argument is stronger. Aren't the premiums too inflated to trade? Nope. Nope. The premiums are actually way less inflated because you're buying the premiums that get hammered down. So then thinking about the bond market here, I know a lot of you guys have seen the crazy calls that I've made in the bond market before. Like, where was it? It was this day right here. Or no. Where was it? Oh, it was bottom in yields, I think it was. Yeah, top in bonds, bottom in yields was right here. It was the day before. So Tuesday, September 17th was the last time that I made a big bond call. It was the bottom of the bond market. The next day, the FOMC meeting is when Stanley Druckenmiller, one of the most successful macro investors of all time, came out and said that he was short the bond market as well, which is basically being long this chart. So painting the picture there for you guys. But I know a lot of you guys are going to start thinking to yourselves, ooh, TLT, TMF. I personally do not think that TLT and TMF are good instruments to use in order to take advantage of these movements in the bond market. I don't. I think there's a lot better things that you can do. And in my opinion, that's going to be going for rate sensitive sectors, which is going to be real estate, biotech, things like that. So that's why I've established that position in RKT. You are too late for it now. I would not go for that now. Everybody in the private community was made aware of this, obviously. The thesis behind it, walked you through it, and everybody's sitting at a really nice buffer right now. So you also have this nice little head and shoulders on the 10-year here. If you end up cracking lower today, which I don't think is likely, I actually, it's possible that we get a pause from Powell and he tries to be hawkish, but it's also possible the market calls his bluff. It basically says, yeah, all right, buddy, we really don't think you're going to do what you say you're going to do, which has happened a lot because the Fed has been wrong at almost every turn. So no, Flavo, no. Nope. You just have to break the top side of that range without breaking the bottom side. So Starbucks, great example of this today. But all right, guys, again, keep smacking that like button on the way in. Those are really the most important things that we need to be on the lookout for the FOMC meeting today. I think it's likely that this is a dud, but we'll see. We could easily get some volatility here. So now, a lot of info there for you guys. Now let's do a little bit of a just a little announcement about the private mentorship community. I mean, if you guys have been paying attention anywhere on Instagram, Twitter, you guys have seen just the unbelievable life-changing amount of gains that everybody has been able to make. I think we've illustrated this really well at this point, that swing trading will always be better than day trading for many, 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 many different reasons. And every single person in the private community can attest to that. I mean, I can just literally look through some of the gains from today. What do we have here? Oh, 107% on Starbucks, 21% in the last week on their accounts, 135% on Kava, 200% on Baba, 350% on Baba. Like, geez, guys, this is getting ridiculous. Like 100% in 10 minutes, like 1,000% on BYON last week. If you guys want to really take full advantage of everything the market has to offer, get access to the private streams every single day. So again, the link at the top of the live chat, if you guys use code TRADE, it gets you your first month for 50% off. It's only $30. That's it. There's no upsells. There's no nonsense. You guys get access to both the educational courses, the private live streams every single day, the full watch list of stocks and cryptos that are about to explode before they do, the macro research reports, the single stock research reports, the community, everything. I don't say it's the best for no reason. Like the results back it up of the success that everybody has had. Um, so, but just to let you guys know, the prices of the community are going to be increasing significantly at the end of February. So if you want to lock in the lower rate and get 50% off your first month, make sure you guys do that before then. So I can throw that link um in the live chat here. And again, I'm going to actually do this too. Let's see. I'm going to do this too. We're actually going to go through and look really quick at some of the messages I've just gotten today from you guys in the Discord. Just got to say, I've always lost money on options, so I have always traded shares. Just joined this week. Watch your training videos twice over, paying attention in the live streams. First 5 option trades since joining here, all positive. Not huge, but gaining confidence in the right direction. 5%, 23%, 13%, 41%, and 60% gains. And my Capri remaining runners are running free. That's awesome. Here's another one. Hey, man, been doing paper trading, trying to get the hang of the system. Did really good, so I made my first real play last Wednesday. Your account only had $30 in it, and at the time, so only had to do one contract. And it hit. So you did another Thursday, hit RKT. So your account went from $31 to 115. So, guys, the proof is there. If you guys want to hop in, take advantage of literally the best trading education and market education that is offered out in the space right now. Make sure you guys do that. If not, when you guys do end up hopping in later after I raise prices, you're going to have to pay a higher price. So, Nike looking really good here. Capri looking really good. RKT, let's see what happens with this today. This thing's selling off. Let's see. Yeah, and then everybody that's in there right now, you guys want to say something about the community there, what your thoughts have been like about it, what your experience has been like in the community. Let them know. This is probably going to be one of the only times we talk about this in the stream here today. Just let the people know what your thoughts have been like, what your experience is, how you like it. Let the people know, man. Like, we're changing lives over here in a big, big, big way. So, and also, like, you guys could just go click that link and read the reviews. Like, I only have 5-star reviews for a reason. Nike looking really great here, though. Really great. So we'll see what happens with that one. We'll see what happens with that one here. We got about 13 minutes to go until the interest rate decision. And then at 2:30, we're going to get the presser from Powell, the prepared remarks, and the Q&A. Let's see. Nike looking dirty. Looking dirty. Yeah, that Starbucks move is nasty. And then what else did we do this? We had dude, like the Alibaba and the Pinduo duos. Like, you guys could have literally just followed on Twitter. Great community. Doubled your account last year with this group. Up nearly 30% this year. Reaper, great job, man. Great job. Yeah, Nike about to hit this level here that I like, 76.69. You get through there, that thing could start having some fun. Yellow on Rick. No, dude, you got to do GRND. What are you talking about here? Look at it. That's actually got a setup. That's actually got a setup here. It kind of is starting to have one. So let's see. GRND, little setup here. This one, Hims. How's Hims look? We'll see. All right, there's Nike at that level there. Ooh, it snuck right up there and got punched away really quick. Yields up. That's interesting. It is going to be we're going to be paying close attention to the bond market, the dollar, USD, JPY, China. There's a lot of different moving parts here. All right, I'll give you guys a little freebie here. Ready? Here's a little freebie. I've been talking about long China for a while. You guys know that I gave everybody out yin, 3 times levered long China. I was buying this thing back down in here, held it all the way through this. Ended up selling my yin that I bought between 20 and 21 at 51. So that was I sold half of it. So I still have free yin. But what I want you guys to think about here is that with the new developments coming out of China in AI, you got to also think about what I like to call the CCP discount. If you look at the financials of a lot of these Chinese tech companies, they are trading at very, very compressed multiples. If like Alibaba was a US company, it would be trading way higher. Now, though, but what you have to think about is everybody saw how crazy US funds, money managers, and just investors as a whole went at AI last year. Now that we have DeepSeek, we have Baba's new model, you now have a very similar situation happening in China. So if you're a US investor right now and you like AI and you can go over, or you don't even have to, you can buy the ADRs if you want to, in the US markets and buy these companies that have potential great upside with supposedly really good margins on the AI that you're building at deep discounts. Ooh, you could see a really big move out of China and those CCP discounts go away in the near future. So just keep that in mind. I have 2 new companies that I'm looking at that I'm going to send to the group. I don't know which one I'm going to do. It's possible that I end up buying both of them actually. And those could be really, really, really fun. Gerald says, if you're not in this Discord, then you're missing out. I tried several other groups and basically lost in all of them. This group takes out FOMO. All we do is win. Well, there's a couple losers sometimes. We wait on the next one best around. Gerald, thank you, buddy. I appreciate you for all those kind words. Yeah, I mean, that's a common theme that we hear with the private community is, oh, I wish I started doing this sooner. It's really that simple. Once you see it, you can't unsee it. And it's like, yeah, guys, it's mind boggling to me that more people don't trade like this in the market. But hey, making money and having success isn't for everybody. More for us. More for us. So that link's floating around there. Use code TRADE, 50% off your first month. It's literally only $30 to join. But at the end of February, prices are going up. So if you want to lock in the lower rate, go for it. Caleb, I haven't been over there in like a year and a half, man. 2 years now, I think. No, year and a half, something like that. And again, we prove it time and time again. Swing trading is always going to help you guys out more and make you guys more money more consistently than day trading. It's just it's the margin for error. Like you guys are just sticking your head in the alligator's mouth and hoping you don't get bit. And then you do get bit and you're like, I'm going to go back and get bit by the alligator again. And it's like, all right, have fun. Have fun. We're going to go make our 500 to 1,000% gains in a couple days. Let us know when you want to come actually make some money using the only edge in the market that actually has ever or will ever exist. Information. When's the meeting? 2 p.m. is the interest rate decision, so 8 minutes, and then 2:30 is the presser with Powell. So we'll see. Market's not going to do anything until then. You might get some wild candles at 2 as the interest rate decision comes out. Bond market's moving a little here. So bonds are selling off. Yields are coming back up a little. Tor! What's up, buddy? How you doing? Wow, we're only 30 likes away from 100 on the stream. Thank you, guys. I appreciate that. Thanks, folks. All right. We got the Powell link ready to go. Oh, do I need more of that? Hold on. I had to hedge something, and I was wondering if I needed more of it. I gotta look. No, that's good. That's good. I'll keep that as a hedge. I'll keep that. That's fine. I don't really need much of the hedge, especially the way that this one thing has been acting. I don't really need to hedge it that much. What else are you looking at? Uber's been looking interesting. And we don't like Uber anymore. Uber, that's a short now. What else? Any other tickers you guys like? We can watch. I mean, it's FOMC. We're not really going to be doing anything. You'd have to be an insane person to be trying to do something on FOMC day. But let's see. Well, what type of information can we use to our advantage when swinging stocks? All of it. All of it. You have to understand the big picture out of the market at all times if you want to have success in it. If you think you're going to put your little cookie cutter setup onto the chart and make money all the time because now somebody told you you have a little money printer in your pocket now, I don't know what to tell you. Like, you're going to lose. Like, you're going to lose. It's all types of information. It's understanding macro. It's understanding the big context of the market, all the data that's coming out, earnings, everything. You have to understand it. This is not a joke or a game that you think you can just like, oh, I'm going to just look at this. Nope, you're going to lose. Tiva. I mean, what is it? They sell like Adderall. It's like, I think this is like an Israeli company that sells Adderall. But no, I'm not really a biotech fan, so this is not going to be something that I'm looking for. Adobe, I don't like. Adobe, not a fan. Well, I just don't like this area on it. Like this area right here, you keep just trading up into it and getting railed. I'm not a fan of that. No, DraftKings definitely does look interesting. The goal with that would be to try and make some contracts free for earnings if you got this break of yesterday's high. Like, that would be the goal with DraftKings. Just get a couple free contracts, hold it through earnings, and see what happens. You're trading risk-free. Yeah, and honestly, I shouldn't even be giving you guys a 50% off sale. Like, the prices that the Discord is right now is really low. Eventually, it's going to go up to $100 a month. So this is the first of many price increases that are going to happen. So make sure you guys lock it in. I always reward those of you guys, though, that come in quick. Like, there's a lot of people that took the courses back in the day that are in the Discord for free. So those of you guys that actually put that foot forward and take action, you guys are always rewarded. Not only by me, but obviously from your trading performance. Tesla? I don't think I like it. No, I don't like Tesla. I think this is not looking good here. Depending on what happens on earnings, but there's also a lot of earnings after hours today. If you guys haven't watched the post-earnings strategy video that I made yesterday, I don't know what to tell you. I mean, that's free money right there. PDD, we already nailed that one. Already nailed it. I gave this one to you guys yesterday. BABA as well. Shout out to those of you guys that made that like 300% move on BABA. So this is a really, actually, this is a good, Flavo. This is a good illustration of using information to your advantage. So this kind of ended up, we have 4 minutes here, so I'll try to do this quick. This ended up kind of being right place, right time a little bit, but the thesis is still there and strong. Chinese New Year starts today and they go into a little bit of a blackout period. If there are any big announcements that are going to come out of China, it was very, very, very likely that they were going to happen yesterday or today. So what did I do? I tweeted it out. I told the Discord, I said, hey, it's very, very, very likely that something happens. I thought it was going to be stimulus, like, because China has been coming out with these big stimulus packages recently. It ended up being Alibaba releasing their DeepSeek AI competitor. So what happens? Baba absolutely goes nuts. PDD had a really, really solid chart set up there that we were able to take advantage of. I think I ended up netting like 80 something percent. I still have it. Where is that? I have freebies on Pinduoduo that I get to let rock here now, which is nice. Yeah, the freebies are up 48%, which is nice. But that's an example of using information to your advantage. It's like, okay, was anybody talking about Chinese New Year and the fact that if anything was going to happen, it was going to be yesterday? No. You guys all saw it though, and we had, I think Josh or some other people were able to make 300% on Baba. There you go. 200% on Baba from Dawn. We got 340% from Jay Niels. Like, nobody's giving you guys that type of information. Like, guys, I've been doing this since I was 14 years old, learning from like the most successful people in like the finance industry. That's why we're able to do this type of analysis. So, all right. About 2 minutes here, guys. 2 minutes for the interest rate decision. I hope you guys are ready. Keep smacking that like on the way in. Then we're going to have 30 minutes to kind of let the market digest here a little bit. And then it's going to start moving again as Powell delivers his prepared remarks. And then you get into the question and answer session. Again, the most important thing that I want to hear about is not tariffs. I literally don't care what the Fed says about tariffs right now. Their assumption is based on what you can read in the textbook about a tariff. It's wrong. It's not, well, I don't want to say it's wrong because according to the textbook, it's correct, but it's not practical in reality. It's like what I tell you guys all the time with like my finance degree. It's like, yeah, sure. It's like technically correct, but is that useful for anything? No, it's not. So what we really need to hear about is what their views now are on the labor market and where the risks to unemployment are. That's the key. That's really how I think the markets should be what they should react on. So we'll see. Cameron, there you go. You had to be patient, but you were up 60%. Yeah, guys, you guys that pay attention to that video yesterday crushed it. Crushed it there. So, all right, 1 minute to go. Uno minuto mas. All right, we're gonna shut this. It's getting bright here. It's getting bright. I don't like that. Now it's dark. All right, let's see. All right, 20 seconds here. Thank you, bro. You're changing lives. That's what I'm here for, man. That is what I'm here for, Cameron. Yeah, I've literally in all my time on the internet here doing this, I have never ever seen the types of gains and life changing like money that you guys have been making than what I've seen in the group here. Oh, here we go. Ah! All right, let's see what comes through the feed here. The Fed held rates steady as widely expected. Here we go. The FOMC statement contains only minor changes, so I think this is a dud, what we were kind of saying, but let's see. The FOMC statement contains only minor changes that marked to market recent economic developments. Labor market conditions remain solid. That's interesting. Inflation remains somewhat elevated. So let's see what they do here. FOMC voted 12 for 0 for federal funds rate action, so there was no dissent. Let's see. Yeah, post earnings could be really interesting tomorrow. So, oh wait, I actually want to read this. Hold on, where is it? Nikki Leaks, where is it? All right. Recent indicators suggest that economic activity has continued to expand at a solid pace. The unemployment rate has stabilized at a low level in recent months, and labor market conditions remain solid. Inflation remains somewhat elevated, is what they're talking about here. So that's the only thing that we're seeing right now out of Powell. I actually want to see how the bond market's reacting. Yeah, yields up. So this is kind of what we were expecting. I thought yields were going to come up to around 4.6. Let's see. RKT, I believe, would be selling off here. Let's see what that's doing. Yeah, a little bit, nothing crazy. So Nike doesn't care. That's what we thought was going to happen. Starbucks, I mean, those post earnings for you guys. Let's see how that's doing. Starbucks also doesn't care at all. So good work on all fronts so far. The money counter? No. Where's Capri? I want to see where that is. That's not really moving. It moved down a little bit, but that's just with the overall market volatility. Again, right now, we kind of went in this. I hinted at this kind of in the initial analysis I was giving you guys. I did think that this meeting was going to be a dud. I don't really think there's much in here that's pretty hawkish. Fed maintains language on extent and timing of future moves. So it's like they're not changing. They're just reiterating. Fed removes reference to inflation making progress toward goal. All right, yields moving back down, markets moving back up. It's too early to tell, but I want to see if the market starts calling the Fed's bluff here because what they're saying is like, oh, inflation's not really moving to our target because they removed that language from the statement, remember. So that's what people are saying right now. It's Fed removes reference to inflation making progress towards goal. Now that could just mean that they decided not to reiterate it again. But the Fed is usually trying to be pretty precise in their language. So it's interesting that they didn't include that in there. I think Powell is going to try and stick to his guns on tariffs because remember, he's going to be from that kind of like academia side where they're going to talk about tariffs as being inflationary. But in reality, as we've seen, it's just a bargaining chip. That's all it is. Is he going to start putting tariffs on people? Probably. But the extent at which they are inflationary, obviously, I think is way overblown by the market at this time. Tesla, how's that looking? Not great. RKT starting to drop there a little bit. That's fine. I mean, again, we're still just looking at this as a reaction to the bond market right now. Facebook moving up. Oh, I mean, they have earnings after hours today. Same thing with Tesla, so it almost doesn't really matter. Meta is actually my largest holding right now. Zuck, you better not screw me on earnings here. I actually should probably buy some puts on that just in case. You know, throw a couple of puts on Facebook to hedge my pretty sizable long-term share position on Facebook. All right, hold on. Let's see. Traders expect Fed to wait until June to cut rates based on short-term interest rate futures. Okay, this is also what I want to see. Fed watch tool. Okay, so this is where we have to go to next, December. I want to refresh this just to make sure I have the most accurate data here. Hold on. This is important. I don't think there's any changes. Lower likelihood. Okay, this is interesting. Lower likelihood of one cut, higher likelihood of two, lower likelihood of three cuts. So what the market's doing is just balancing out at that 2 rate cut projection. That's what you're seeing. That's all you're seeing right now. So again, guys, if you guys do enjoy these types of streams here, the analysis that I'm giving you guys, make sure you guys hit that like button. Costs you nothing to do. It helps me out a whole lot spreading these streams out. So again, really, really dud of a reaction out of the market here so far. You're just kind of coming back down to those NVIDIA lows. You really haven't moved here. It's coming down a little, but like that's negligible for an FOMC move. Everybody that tried to gamble on Powell got rugged. As they should. You should not be gambling on FOMC. You want to have long-term success in the market? Act like a professional, okay? I haven't really seen anything about the labor market though. A little bit. I mean, they said let me see. U.S. stocks moves down. I mean, that's to be expected. I didn't think they were going to move up. It's really going to be depending on what's said in the Q&A. What's really going to move this market around is earnings after hours today. Yeah, unemployment rate is stabilized at a low level. I think they're missing the point here, guys. I really do. I think the Fed is kind of missing the point here. Are you expecting a neutral Powell with dovish or hawkish? He's probably going to be pretty neutral. I think the market is kind of expecting him to be a little hawkish here, but it depends. It's because right now it's a debate over whether like what he should be doing and what I think is the right thing versus like what he's actually going to do, if that makes sense. With the way you teach and explain your methods, you think somebody who has never traded or knows the lingo would do well too? Yeah, everybody would. Everybody would do well, George. Think about it. Like we talk about like super complex financial topics, and like all of you understand them now. Like the yen carry trade, the effects of the bond market on the equity market, like earning, all of this stuff. It just takes a little time and ask questions. I'll always explain stuff more simply. What if Powell gets a QE QT question off of Canada? Yeah, I don't know. I don't think he would. Let's see. See, RKT's fine. I mean, it's down 4% here. Yields are ripping. That's why. Look, you're just bouncing out of the zone. That's all you're doing. But has this fire? Could it come back to profitable if the market shifts? Yeah. You would need something crazy to happen, but it is possible for that to happen. Is it likely? No, because your delta is going to be nothing. But guys, Trusty V, been following him since, yeah, and what he's saying is true. Yeah. Yeah, guys, make sure you guys hop in, take advantage of it. Like $30 for your first month, like it's a no-brainer. But prices are going to go up significantly again. I had a lot of these launch offers for you guys when I did bring this out to you guys, but now prices are going up to where they should be. So if you guys want to lock in the lower rate while it's still there, make sure you do it. If not, you're going to have to pay a higher price when you do hop in. All right, the construction that they're doing next door today is really getting in my head. It's really getting in my head. So yeah, I'll throw that link in here one last time for you guys. Use code TRADE, 50% off your first month. I might just kill that code too in like a couple days. No more 50% off. I don't know. We'll see. Nike holding well. Where's Starbucks? How's that looking? Oh, look, Starbucks still higher. Who's still in this one? That was such an epic post. I mean, it took forever, but it got there. Market dud. Oh yeah, and then make sure you guys are following me on Twitter too. Short the VIX too. A lot of you guys might still think that you're following me on Twitter, but I made a new one back in like June and then like deactivated the old one. We just hit I think 1,000 followers on the new one. So short the VIX too. Make sure you guys are following that. I mean, I could grab the link to the Twitter account here too. You guys want it? Here you go. Make sure you guys are following. Todd, what's up, buddy? How you doing? Todd, you hit your first 1,000% last week. The private community, it's so worth it. Oh, thank you, man. I appreciate that. You got, Cameron. Yeah, you got some time on that one. That's a good one. Maurice, thank you for the positive, kind words there, man. Yeah, it's the best community in the world. Nike chilling, doing its thing. Market doing its thing. Capri doing its thing. RKT down. That's fine. I'm not worried about this one. The thesis is still the same. Tesla and Apple. Yeah, Facebook could be interesting tomorrow. Again, there's going to be a lot of action happening after hours today, guys. Beyond, yeah. Todd, shout out to you. First 1,000% gain on a trade. Epic, man. That's what it's all about. A little while ago, up 65%. Waited too long for profit. Yeah, that's fine. T-Mobile post earnings. Yeah, I was in that. I cut that one. I left that one be. That one was looking really good for a second there, and then it just started to fade. That one was actually looking way better than Starbucks for a while, and then Starbucks just took off. But yeah, those are always size for zero. Make them free at 100% and then sling them for the five. I mean, that's the strategy that netted Jay like 6,000% on the Oracle trade. Oh, Kava? Yeah, Kava's another one. I think we briefly talked about that one in the chat. It's a good setup and then just ripped faces off there. Yeah, that was perfect. Yeah. So market, I mean, I could easily see this trickling lower here, but like if I was big money, right, I'd be calling the Fed's bluff. I'd be like, oh yeah, tariffs inflationary, huh? Labor unemployment rate is gonna continue to trend lower when they're gonna come out and and have all those government employees not work for them anymore and then have to find new employment when the labor market is already as difficult as it is. Okay. Good luck with that. That's great. Let's see if how that plays out. Sounds like a great thesis, Fed. Like that's why I'll just sit here and say these things because in my opinion, in the way that I'm viewing it right now, I think my argument is stronger than what they're saying. If I agreed with them, I'd be like, okay, I agree, but I don't, and that's why I've taken the positions that I did. We've been really spot on with the bond market so far. I still think again, you've got this little head and shoulders. You break this neckline, you come into this zone. If it breaks through this zone on the 10-year yields, you're gonna fall like butter. But we'll see. Market not liking this so far, which is interesting because nothing's really happened. Nothing's really happened there. So, is there anything else in the feed? I don't think there is. No, but we got about what 19 minutes until Papa Powell comes on. How many deported job vacancies will need to be filled? That too. Like that's the other part of this too that we haven't even really talked about a whole lot. Like the deportations because illegal immigrants. You guys may not know this. They are counted, like in NFP. So is part time. Like part-time jobs too. So it's going to be a very, very interesting development that I think they're just missing the ball completely on the labor market. And this isn't like me sitting here saying it for no reason. Like there's a lot of really good reasons for why we're talking about the labor market and not inflation right now. Because if the labor market does what it's everything is kind of pointing at it doing, why would you then worry about the inflation numbers because they're going to come down? The demand side of this is just going to get taken out. So it's definitely going to be something to look out for there. If you're not looking out for it and you're not paying attention to the big picture of the market, I was also thinking about this the other day too. I think for most people, I know a lot of you guys, like you guys that pay attention that are in the group that like are really learning about a lot of these different elements of the market and investing. It's like when I think about the market, I think about it as like a competitive arena because the market in general, and especially trading, it's a zero-sum game. So there's a winner and there's a loser in almost every transaction. Now, again, you got to talk about market making and delta neutral and all that stuff, but like whatever, let's just put that aside for a second. So if you boil it down really, you can technically like simplify it to like a two-person game with a certain market. Okay, well, if both of those people take opposite sides of the transaction, there's one winner and one loser. And the argument that I'm trying to get at here is that for most people, it doesn't make sense for them to like go into the market and pick individual equities. Like my buddy the other day, he was talking about Nvidia, and he was like, "Oh, I just bought Nvidia on the dip," and he was like, "Should I do this?" And I was like, "Well, like I wouldn't do that." And the reason is because like I have been doing this for so long that like that's just not I'm not buying Nvidia, guys. Like it's not worth it. There are way better uses of my capital elsewhere, like the Palantir at 15 to 71, like the SoFi from 655 to wherever it is right now, Yin from 20 to 50, Philip Morris from 95 to 30 with 3 dividends. Like there's a lot of different ways that you can do this. But the way that I boiled it down is that do you really want, and this is it's like, do you want to compete against, and I don't want to say like me, like I'm very good at this, but like there's obviously other people out there with like more analytical power or capability than me. It's like, do you really want to compete against those people? No, the answer is no, you don't. So for most people, it is going to make a lot of sense most of the time to just go and invest in the index because you're not playing in the actual arena. You're like, I haven't found a good metaphor for this, but you're like almost just playing off of the general outcome of the game, like a total point scored or something. I gotta think of a better part of that analogy because I want to tweet that. I just don't have that part of it. But does that make sense? It's very competitive, and like because most people were going to come into the. Also, on the flip side, though, is that you have a lot of idiots in the market too, that you could. I don't want to say take advantage of, but like if you can see the bond market's a great example. Like last year, all of the on a lot of the different times that like the bond market would overcook itself. Like that's who's participating in the bond market. It's big. It is bigger money, but they're going off with what the Fed says, and it's like, well, what the Fed says a lot of the time it's nonsense. Clip that. You guys can clip it and put it on social media if you want. I've been thinking about this for like the last 36 hours. Because it's competitive. It's in an arena. You can boil it down to like a 2-person game and say, do you really want to compete against this? No, you don't. And it was really that like thought of like, oh, I'm going to buy NVIDIA. And it's like, it might work, but like, I wouldn't do it. Why wouldn't I do it though? Well, I have better uses of capital and information than just going out and buying NVIDIA, you know? So we'll see. Betting the spread versus specified wagers. Yeah, I'd have to think of a better part. It's like you're not actually here's the one that this is the one that I came up with that I thought was good was it's like golf. It's like betting on golfers. It's like you're not actually the one out on the golf course. You're just being able to pick the top 10 and saying you're probably going to do okay in whatever sort of wager that you have. Like you're not actually the one out there on the golf course competing against Tiger Woods. All you're doing is picking people in the top 10 and saying, okay, here you go. You're probably going to do okay. You know? So, but my goal here is to get all of you guys up to that level where you can understand these things. Instead of running in the race, you're betting on the winner. Yeah, but you're not betting on the winner because like that's technically single stock picking. I think my golf one's pretty close where it's like you're not out there playing. You're picking a group of people in the top 10 and just saying odds are they're going to do all right over time. And then also that top 10 changes. So it's like the ETF or the indexed version of it. So I think that's the best way to look at it. I just don't think many people are going to get that. RKT's getting drilled there. Yeah, struggling? Yeah, it's moving down. It's moving down. You know what doesn't care? Nike. Nike's chilling. All right, we got about 13 minutes to go here, folks. See what we get. Actually, I want to see where's USD JPY? Dollar up on that. That makes sense. Where's like emerging markets? EWZ, Brazil. Down. EEM is just the emerging market index fund. That's down significantly. Well, gapped up, came back down. Where's China? How's China look? PDD, fine. Yen, it's 3 times levered long China. It's down, but that makes sense. SPY is the overall winner over time. Right. That's what I'm talking about. Daniel is like, but for most people, like, okay, somebody that works a normal job that's not going to sit here and looking at things every single day that I am, it's like you're already at a disadvantage. Unless you're like in the group, like analyzing things, asking questions, like actually putting some time into it. If you're just like, I'm going to watch CNBC and buy NVIDIA, it's like you're not going to do well. Like, and that also goes towards the thesis where I tell you guys, it's like information is the only edge that has existed and will continue to exist because you can exploit it. Just think about the China trades from yesterday that you guys were all able to nail. That's a perfect example of information right there. It's just thinking a little differently. Or when we called it back in here or in here and wrote it up to here. I love this I sold here. I love that one. All right, where's the market? It's leaking a little, but nothing crazy. Like you look at this on the daily, you're still very close to these highs. We haven't talked about this yet. I mean, this is just an illustration of what we did. But my full green light out of the market to start really slinging things with size again is a higher low off of this shift of trend, which looks like we got, but we'll see. We'll see. Yields at they're close to high of day. I actually thought these were going to come back up to like 4.6. That's kind of what I was looking at there. 4.6 on the 10-year. Right at that daily 10 EMA. Oh, here's another good thing too. This is a good illustration of why I bet TMF and TLT are getting railed. Yep. Okay, so unless you bottom ticked TMF or TLT, which is very difficult to do, you're pretty much flat. Look at my RKT. My buy is in between here. So I'm still up. Let's see if I can get the midpoint here. It's like right in there. I'm still up like 4.6% on those shares. That's why I'm going rate sensitive and not TMF TLT. It doesn't make sense. It just doesn't. Like Lebu, you can look at Lebu too. I bet Lebu's doing all right. Well, yeah, I mean, Lebu, good move here. You'd still be up a little bit. Lebu actually has a good setup here. Biotech, 3 times levered biotech ETF. Look at XBI. That's another one. Same look there. XBI is the unlevered one. If you want to trade options, you go to XBI. If you want to trade the shares, you go 3 times levered. Lebu. Oh my God, Ethan. Dude, I just looked at the community gain section of the Discord. 272% on Starbucks. Congratulations, buddy. That is awesome. Ethan's a new member too. Look at that, man. That's awesome. Coming in, nailing a trade for 270%. That's unbelievable. So again, I'm going to throw that link in here for you guys one last time. It's pinned to the top of the live chat. The discount code for 50% off your first month. It literally lets you in for $30, which is, there's no upsells either. It's not like come in and I'm going to just like sell you a bunch more stuff. No. What you see is what you get. 50% off your first month. Prices are going up at the end of February. You guys want to lock in this lower rate. There's going to be more price increases in the future too, so watch out for that. But there you guys go. I mean, I've been pretty loud on Twitter and Instagram with how crazy the gains have been in the community. So you guys want to have long-term success in the market? Great. If not, might struggle. All right, let's see. Worries you with all those wicks? Yeah, it would have to tighten up a little bit there. Nike starting to smooth down a little bit there. Let's see what happens with that. Market's coming up off the lows a little bit. Let's see what we get here, folks. What do we got? 9 minutes for Jay Powell. Where's Capri? It's flat. Where are they with Ung? What about this chart, George? What about this would make me interested right now? Now I'm gonna have you. What type of setup does this meet for me to trade? Dollar on the 5-minute. Oh, let me pull that up. I'll answer that question too. It doesn't. You is in no man's land. Oh, yeah. The dollar's ready to do something there. Dollar's definitely ready to do a little something there, guys. All right, folks. 7. Wow, we're almost at 100 likes on the stream. 13. Thank you, folks. I appreciate that. Yeah, and then I'll be back live Friday morning for you guys too. Friday's our public live day, so if you guys want a little taste of what we do in the private community, I mean, I'm live every day for them in there, but Fridays you get a little taste, little public live day. So, all right, let me pull Powell up here, just so we have this lined up, ready to go. Nike back up. Trump says 1.7 billion in payments to foreign organizations. Pause, claims funding freeze targets waste and fraud. That's interesting. Interesting. Okay. I'll throw a like in. Thanks, Jason. Appreciate that, buddy. Where's US Steel actually? They report. Yeah, it still looks good. I just can't touch it. Like, got earnings in 2 days. PC Friday too. Yeah, GDP tomorrow morning as well, and jobs report. So those two are going to be big tomorrow morning. Watch out for those. Those will get interesting. It's been a wild week. I mean, think about what we've been able to do. Oh, you know what was the craziest? Monday, when the market was drilling, guess what happened? All of our stocks that we were in were skyrocketing. When do you think the commercial real estate brings on the market? I don't think it does. There's too much. There's too much extend and pretend going on with them. Platform or broker? Webull, Tradeovate, Ninja Trader, Robinhood, Thinkorswim. Broker doesn't really matter, guys. Really doesn't matter. I feel like most of the people ask that question because they're used to those like scammy Forex offshore brokers that are just scams. Oh, don't use those. Okay, cool. Oh, Jason, you should have. I was around. All right, market fading. Oh no, Powell said nothing. We gotta sell all our stocks. Dude, I just think it's so funny watching the market react sometimes. It's like, oh, what happened? I don't know. Sell everything. Like, it's literally what's going on right now. All right, dollars moving up, yields are moving up. Powell's sticking to his guns. I don't really think he's got an argument for that, but we'll see. The Q&A is going to be really interesting today. So we got 4 minutes to go until Powell comes on. Yeah, Ralph, people were talking about that earlier, that like there's probably going to be a Trump tweet about yeah, somebody brought that up earlier, that there's probably going to be a Trump tweet about not cutting rates. Yeah, yields are coming up. I think it's possible that we hit 4.6 today. I can't wait to show you guys in the group too the two other stocks that I'm looking at. You guys are gonna be like, oh, I see what you're doing. I gave you guys a hint last night. You guys should be able to figure it out from the hints I gave you. I just don't. Again, I haven't done the full work on it yet, so I know some of you guys are like, oh yeah, STV never misses on the mid to long term position trades. It's like, yeah, well, like I haven't bought it yet. I haven't done the full work on it yet, and I know if I say it, you guys are just gonna be like, oh, I'm buying it, and it's like, all right, well, let's not do that. Like, you guys were asking today, and I was like, I can't. I'm not. I know what you're gonna do. I don't trust it yet. Soon, but not right now. Oh no, sell all our stocks. Oh my god, what happened? I don't know. Sell all our stocks. That short-term capital gains. Watch, they're gonna just buy them back higher later. Oh, it depends. We do have earnings after hours today. We have a lot of them. Today's like the biggest earnings day of the year or cycle. It's like what? I think we have Tesla, Apple, Facebook. We got a lot of the big boys. We got a lot of the big boys reporting, ladies and gentlemen. Starbies. There you go. If you haven't watched that video, I highly suggest you do, especially for tonight. Maybe I should get that link to that. I don't know. It's the most recent video on the channel. You guys either want to make money or you don't. Go watch it or don't watch it. That's fine with me. I don't care. Like, turn your brain off, make money. That's literally that video there. It's not hard. This is actually probably going to form a little setup for us here. Yeah, put a link. It's the all right. Well, I don't even know if I can find it. I can't find it. Go. It's not that hard, guys. It's the most recent video on my YouTube channel. Make sure you guys watch that before tomorrow. That video could make you guys a crap load of money. It's how we nailed the RCL for 500% yesterday. The AT&Ts for 300%. I know all of you guys nailed the Starbucks today. The T-Mobile didn't hit, but you really don't need very many of these to hit in a cycle to do it. So yeah, watch it or don't. I mean, we're gonna go make money regardless. Like that's kind of it. It's like you guys either want to have success or you don't. Gay bud. Go watch it. It's the most recent video on the channel. I'm not your mom. Dollar. I know a lot of you guys are still in here trying to scalp short time frames with just like nonsense on the charts. Have fun, go for it. I bet that's going great for you. Like, we're gonna go hit 500 to 1,000% gains. There's a free video out there showing it for you. Go watch it or don't. All right, here we go. Here we go. Oh, I missed it. Is the door gonna open? When's the door gonna open? Where's Pal? Where is he? Where's Jerome? Oh, here he is.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The economy is strong, is strong overall, and has made significant progress toward our goals over the past 2 years. Labor market conditions have cooled from their formerly overheated state and remain solid. Inflation has moved much closer to our 2% longer run goal, though it remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. For 2024 as a whole, GDP looks to have risen above 2%, bolstered by resilient consumer spending. Investment in equipment and intangibles appears to have slowed in the fourth quarter, but was strong for the year overall. Following weakness in the middle of last year, activity in the housing sector seems to have stabilized. In the labor market, conditions remain solid. Payroll job gains averaged 170,000 per month over the past 3 months. Following earlier increases, the unemployment rate has stabilized since the middle of last year, and at 4.1% in December remains low. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a wide set of indicators suggest that conditions in the labor market are broadly in balance.
Did he really just leave GDP?
The labor market is not a source of significant inflationary pressures.
It's just bad.
Inflation has eased significantly over the past 2 years, but remains somewhat elevated relative to our 2% longer run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.6% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 2.8%. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. We see the risks to achieving our employment and inflation goals as being roughly in balance, and we are attentive to the risks on both sides of our mandate.
No, you're not. No, you're
Over
not.
the course of our 3 previous meetings, we lowered our policy rate by a full percentage point from its peak. That recalibration of our policy stance was appropriate in light of the progress on inflation and the rebalancing in the labor market. With our policy stance significantly less restrictive than it had been, and the economy remaining strong, we do not need to be in a hurry to adjust our policy stance. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer. If the labor market were to weaken unexpectedly or inflation were to fall more quickly than anticipated, we can ease policy accordingly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. As we previously announced, our 5-year review of our monetary policy framework is taking place this year. At this meeting, the committee began its discussions by reviewing the context and outcomes of our previous review that concluded in 2020, as well as the experiences of other central banks in conducting reviews. Our review will again include outreach and public events involving a wide range of parties, including Fed Listens events around the country and a research conference in May. Throughout this process, we will be open to new ideas and critical feedback, and we will take on board lessons of the last 5 years in determining our findings. We intend to wrap up the review by late summer. I would note that the committee's 2% longer run inflation goal will be retained and will not be a focus of the review. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer run inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Here we go.
Mr. Chairman, Steve Leisman from CNBC. Mr. Chairman, at a event in Davos, to Davos anyway, the president said he'll demand that interest rates drop immediately. So I guess I have a 3-part question. Has the president done this to you? Has he made that demand? Secondly, what is your response to that? And third, what effect, if anything, if any, does a president making these kind of remarks have on policy? Thank you.
Not my job. He doesn't care. Move on. Next question. This is stupid.
I'm saying it really is one question though, so I'm not going to have any response or comment whatsoever on what the president said.
It's a stupid question.
It's not appropriate for
Don't
me to
even
do so.
ask that.
The public should be confident that we will continue to do our work as we always have, focusing on using our tools to achieve our goals and really keeping our heads down and doing our work, and that's how we best serve the public.
Can you just comment on whether he's physically communicating this demand to you?
I've had no contact. Thanks.
Nick Timmeros, The Wall Street Journal. Chair Powell, you and several of your colleagues said around the time of the last meeting that your policy stance was meaningfully restrictive. Given economic and financial market developments since then, how has your confidence changed in an assessment that says interest rates are meaningfully restrictive?
I don't think that my assessment really has changed. I mean, a couple of things have happened. We've gotten more strong data, but we've also seen rates move up at the long end, which could represent a tightening in financial conditions. I think if we look back over the past year or so, we can see that policy is restrictive. If you look at the effect of high rates on interest-sensitive spending, for example, in housing, and if you look at the achievement of our goal variables, we're seeing the economy move toward 2% inflation and has moved largely to maximum employment. So we really look at the movement toward the goal variables to make that assessment. Now, policy is meaningfully less restrictive than it was before we began to cut. It's 100 basis points less restrictive, and for that reason, we're going to be focusing on seeing real progress on inflation, or alternatively some weakness in the labor market before we consider making adjustments.
If I could follow up, does the economy here warrant meaningfully restrictive interest rates? And would you judge interest rates to still be meaningfully restrictive if you were to lower them by another quarter point?
So I think our policy stance is very well calibrated, as I mentioned, to balance the achievement of our two goals. We want policy to be restrictive enough to continue to foster further progress toward a 2% inflation goal. At the same time, we don't need to see further weakening in the labor market to achieve that goal. And that's kind of what we've been getting. The labor market has really been broadly stable. The unemployment rate has been broadly stable now for 6 months. Conditions seem to be broadly in balance. And I'd say you look at the last couple of inflation readings and you see we don't overreact to too good readings or too bad readings, but nonetheless, the last couple of readings have suggested more positive readings. So I think policy is well positioned.
Colby from the New York Times.
Colby Smith with the New York Times. Chair Powell, how should we interpret the removal of the line from the statement that inflation has made progress towards the 2% goal? Is that no longer the case?
No. So
good question.
If you just look at the first paragraph, we did a little bit of language cleanup there. We took out a reference to since earlier in the year as it related to the labor market.
Great question.
And we just chose to shorten that sentence. Again, I mean, if you look at the sort of intermeeting data, it was good. And there was another inflation reading, I guess, just before the December meeting. So we got two good readings in a row that are consistent with 2% inflation. Again, we're not going to overinterpret too good or too bad readings, but this was not meant to send a signal. Other than this, you can take away from all of this that we remain committed to achieving our 2% inflation goal sustainably.
And just to follow up, we've seen inflation expectations across a number of measures rise sharply, which has in part been linked to tariff concerns. But there's also been this encouraging data that you mentioned in terms of CPI and rent indices. So how would you characterize concerns about upside risks to inflation across the committee, especially those tied to policies related to the Trump administration?
Well, I'd say you see expectations moving up a little bit at the short end, but not at the longer run, where it really matters. And those could be related to what you mentioned, some of the new policies. I think where the committee is very much in the mode of waiting to see what policies are enacted. We don't know what will happen with tariffs, with immigration, with fiscal policy, and with regulatory policy. We're only just beginning to see, and actually are not really beginning to see much. And I think we need to let those policies be articulated before we can even begin to make a plausible assessment of what their implications for the economy will be. So we're going to be watching carefully, and as we always do, this is no different than any other set of policy changes at the beginning of an administration. We'll patiently watch and understand, and kind of not be in a hurry to get to a place of understanding what our policy response should be until we see how it plays out.
Why didn't you say that last time?
Michael McKee.
Michael McKee for Bloomberg Television and Radio. You and your colleagues normally condition future policy moves with the phrase, if the economy develops as we anticipate. Is it fair to say that since there's a lot unknown about what this administration's fiscal policies are actually going to be, that you don't have a medium to long-term economic forecast that you can have confidence in? Or if that's not true, can you lay out what you think is going to happen in the economy, how you see it developing?
Well, at all times, forecasts are conditional at a minimum on just a set of expectations, and they're highly uncertain in both directions. We know that economic forecasting is really difficult beyond just a month or two out. So in the current situation, there's probably some elevated uncertainty because of significant policy shifts in those four areas that I mentioned: tariffs, immigration, fiscal policy, and regulatory policy. So there's probably some additional uncertainty, but that should be passing. We should go through that, and then we'll be back to the regular amount of uncertainty. So, what forecasters are doing, not just us, but everybody's doing, is they've got
I'll be here all week.
sort of just a set of assumptions about what might happen, but they're really kind of in the nature of a placeholder. And meaning, plausible could be, but honestly, you wouldn't stand behind it because you just don't know. And so you're just on hold, waiting to see what comes down. It's a very large economy, and policies affected at the margin. But we're going to wait and see.
If I can follow up the
They're waiting for the good
idea
guys.
that you feel the economy that policy is restrictive suggests that the Fed in general wants to continue to lower interest rates. So when you look at the data that you are dependent on, are you looking for data that tell you that you can cut or data that will tell you you should hold?
You know, we're looking, it's more the way it works is we are looking at the data to guide us in what we should do. And, you know, that's what we do. And right now, we feel like we're in a very good place. Policy is well positioned. The economy's in quite a good place, actually, as well. And what we do expect is to see further progress on inflation. And, you know, as I mentioned, as we see that, or if we were to see weakening in the labor market, that could foster, we could then be in a position of making further adjustments. But right now, we don't see that, and we see things as in a really good place for policy and for the economy. And so we feel like we don't need to be in a hurry to make any adjustments.
Howard Schneider with Reuters. Thank you very much. In 2021 at a central bank conference, you said, quote, throughout my career in both public and private sectors, I've seen that the best and most successful organizations are often the ones that have a strong and persistent commitment to diversity and inclusion. These organizations consistently attract the best talent by investing in and retaining a world-class workforce. First question is, do you still believe that? And if so, how do you intend to put that belief into practice while remaining consistent with the recent executive order prohibiting diversity and inclusion efforts?
So let me say yes in answer to your first question. But to the second question, I want to say this. We are, like others, we're reviewing the orders and the associated details as they're made available. And as has been our practice over many administrations, we are working to align our policies with the executive orders as appropriate and consistent with applicable law. And I want to add that I'm not going to have anything more specific for you today on this whole set of issues.
Well, if I could just follow up quickly on that. I'm wondering how you're getting that to be consistent with the Dodd-Frank law's stipulations about maintaining an Office of Minority and Women's Inclusion.
So I did mention consistent with applicable law, right?
Which is governing.
Elizabeth. Thanks so much. Elizabeth Schulze with ABC News. Just to follow up on Steve's question, what reassurance can you give the American public that the Fed will continue to operate independent of politics under this administration?
You know, as I've said countless times over the years, this is who we are. This is what we do. We study the data. We analyze how it will affect the outlook and the balance of risks, and we use our tools to try to, given our best understanding, our best thinking, try to achieve our goals. That's what we do. That's always what we do. Don't look for us to do anything else. And that's, you know, lots of research shows that's the best way for a central bank to operate. That'll give us the best possible chance to achieve these goals for the benefit of the American people. That's always what we're going to do, and people should have confidence in that, as I said a few minutes ago.
You said that the Fed is in wait and see mode based on the policies that come out of this administration.
Yeah, bonds
Has
are coming
the
back
Fed
down.
started to model what policies like mass deportations, changes in immigration policy specifically, would look like for the workforce and for inflation?
So one of the things our staff does is they look at a range of possible outcomes, and they tend to go from really good to really bad, and you know it's one of the best things that they do. And in each teal book, you can look at the 5-year-old teal books and see there are alternative simulations. So that's what they do. You'll be a baseline, and then they'll show 6 or 7 alternative scenarios, including really good ones and not so good ones. And what those do is they spark, you know, the policymakers to sort of think and understand about the uncertainties that surround us. So yes, we the staff does that, and we're all well aware that the range of possibilities is always broad, and not just now but always. And you have to. It's hard to be open to just how broad the possibilities are for an economy. You know, no one saw the pandemic coming, and it was, you know, it changed everything. So things happen, and but yes, we do that. But it's different. It's one thing to do that, to make assessments about what might happen and begin to think about what you might do in that case. But you don't act until you see much more than we see now.
Katerina Saraiva, Bloomberg News. Last month you talked about a future rate cut as being pretty, significantly predicated on more progress in inflation. With the characterization of the labor market in the statement today, would you say that that's even more so the case now?
I'd say it's the same. We want to see, further progress on inflation. And, the story's there. We're just going to have to see the data. At the end of the day, it comes down to 12-month inflation because that takes out the seasonality issues that may exist. And, we're just going to need to see that. We think we see the pathway for that to happen. One example, a key example, is that you now do see owner's equivalent rent and housing services, the way it's calculated for PCE. You see that coming down pretty steadily now, and that's the place where most of the remaining gap is. In addition, a big part of the overrun, as you will know, was from non-market services, which don't tend to send much signal. So you can look through all that and think, okay, that then we seem to be set up for further progress. But being seen to set up for it is one thing, having it is another. So we're going to want to see further progress on inflation. But remember, we're not, we're under 2%, but our goal is 2%, and we do mean to get back sustainably to 2%.
And in terms of the labor market, I mean, how is that broadly? You said a broad set of indicators show that it's in pretty solid place. Was there broad agreement on that? There's been a few underlying indicators that are showing perhaps some weakness, a low hiring rate, workers reporting that it's increasingly difficult to find a job. Is that of concern to the committee?
So you're right. I mean, we look at, of course, a very broad range. And so it starts with unemployment, with the unemployment rate, employment participation, wages, job quits, are people quitting, that kind of thing. The ratio of vacancies to unemployed. We look at all those things, and you put your finger though on it's a low hiring environment. So if you have a job, it's all good. But if you have to find a job, the job finding rate, the hiring rates have come down, and that's more typical of a.
Thank you.
Let's say that the unemployment, that the labor market is at a sustainable level. It's not overheated anymore.
Thank you.
We don't think we need it to cool off anymore. We do watch it extremely carefully. It's one of our 2 goal variables. But I'd say we watch those things quite carefully. But nonetheless, overall, look at the aggregate data in the labor market. The labor market does seem to be pretty stable and broadly in balance when you've got an unemployment rate that has been pretty stable now for a full half a year.
Bang.
Edward.
Thank you. Thank you, Mr. Chairman. Edward Lawrence with Fox Business. On employment, you said there's a broad range of possibilities, but last September you said, quote, "We understand that there's been quite an influx across the borders, and that has actually been one of the things that's allowed unemployment rate to rise. Now that the flow of the border has slowed and we're seeing deportations, how do you expect the unemployment rate to react?"
So what's happening is that the flows across the border have decreased very significantly, and there's every reason to expect that to continue. But job creation has come down a bit too. So, if those 2 things come down together, that sort of can be a reason for the unemployment rate to stabilize. In other words, the break-even rate, as population growth slows, the break-even rate that you need in new jobs to make make jobs for workers declines as well. So that seems to be something about what's happening. You do see a very flat unemployment rate at a time when you've seen significant declines.
I want to ask you about Fed employment. I know that tax money is not used here, but Elon Musk alleges that the Fed is, quote, absurdly overstaffed. We've seen the executive branch push to reduce the federal workforce. I just want to get your reaction.
Here it is. Here it is. Listen.
We run a very careful budget process. We're fully aware that we owe that to the public, and we believe we do that. I've got no further comment than that. Thanks.
Chris.
This guy.
Chris Rugaber at Associated Press. President Trump has said he will lower inflation by reducing gas and energy costs. Do you see such costs as a particular driver of inflation, and would lowering them have a dramatic effect?
Chris, I'm not going to going to react or discuss anything that any elected politician might say. So I'll give you a mulligan.
Okay, thank you. Well, nearly 2 weeks ago, the Fed said it was withdrawing from the network for greening the financial system, even as we have significant wildfires in Los Angeles doing billions of dollars in damage. And of course, the NGFS, as you know, is a group to talk about how the financial system could address climate change. Many commentators did see the timing as political. Why did you leave that organization? Can you explain that decision?
Sure, I'd be glad to. So we considered this, really at length, and we did decide to withdraw from the NGFS. And really, the reason is that the work that the NGFS does has broadened very significantly. Think about nature-related risks and biodiversity and things like that. In addition, the work of the NGFS is in significant part intended to, and this is a quote, mobilize mainstream finance to support the transition toward a sustainable economy. So we joined to get the benefit of understanding what other central banks were doing and seeing research and things like that. I think this is just way beyond any plausible mandate that you could attribute to the Fed. And so we have a quite narrow role, as I've said many times. And I think that the activities of the NGFS are not a good fit for the Fed, given our current mandate and authority. So, and I just think it was time to acknowledge that, this process dates back a couple of years. I made the decision to bring this to the board, some months ago. The process just took time to get here, and this is when we got it and voted on it. So, and I'm aware of how it can look, but it was really not driven by politics. It was driven by kind of the disconnect between the work of the NGFS and our mandate. Other central banks have different mandates and belong to the NGFS. We have no criticism of them, but it just isn't. It's not right for the Fed.
Andrew.
Thanks, Andrew Ackerman with the Washington Post. I'm wondering if you could talk more about what further progress would look like for consumers.
Well, 2% inflation down to 2% sustainably is what we're trying to achieve. We're somewhat above that, as you know, and we want to see serial readings that suggest that we're making further progress on inflation. That's what we want to see, and consumers will pick that up, of course, in the things that they buy at the grocery store or at the store.
The other thing I wanted to ask was just how far away you think you are from neutral.
Yeah, you can't know with any precision, of course, as I like to say, that you know the neutral rate by its works. So I think at 4.3%, we're above pretty much everyone on the committee's estimates of the longer run neutral. I think our eyes are telling us that our policy is having the effects on the economy. That's really the question we ask. You can consult models, empirical models, theoretical models. You really have to just look out the window and see how your policy rate is affecting the economy. And I think we see that it's having meaningful effects in bringing inflation under control. It has helped bring the labor market into balance as well. So that's what we think. I would say we're meaningfully above it. I have no illusion that anyone knows precisely how much that is. But not knowing that and having cut 100 basis points means that it's appropriate that we not be in a hurry to make further adjustments.
Victoria.
Victoria Guido with Politico. So as a general matter, when it comes to executive orders and OMB memos, do those always apply to the Fed, sometimes never, or do you just often voluntarily comply? What is the legality there?
So it's been our practice, as I mentioned, to work to align our policies to those that are mentioned in the executive orders, and I'm just going to leave it at that. As I mentioned, I'm not going to go any deeper than that or get into any deeper into this set of issues today.
Claire.
Claire Jones from the Financial Times. Two questions, if I may, on tariffs. Well, first of all, we've seen global trade wars before, notably in 2019, last time around, but then we were in a very different place on both inflation and growth. if we see tariffs of the same sort of magnitude that we got then, which I know is big if, what do you think might be different this time around? And secondly, Tiff Macklem said there was no doubt that the threat of tariffs was a big driver of the cut by the Bank of Canada today. What sort of information would the Fed need to see on tariffs before it was willing to take such a preemptive move?
They're not going to like his response. He's going to.
What sort of information would you need to see on tariffs? Would you need to see a strategy, actual implementation, actual movement of inflation expectations before you're actually willing to change the path of monetary policy on the basis of it?
Yeah, so first of all, things are a little different now. We've just come through a high inflation period, and you can argue that both ways. You can say that companies have figured out that they do like to raise prices, but we also hear a lot from companies these days that consumers have really had it with price increases, and so I don't know how that shakes out. Nonetheless, you're coming through a situation where we're not quite back to 2%, and that's just different. In addition, the trade, the kind of footprint of trade has changed a lot as trade is now spread around. It's not as concentrated in China as it was. There was a lot more manufacturing. It moved to Mexico and other places. So there are differences, and I just think the range of possibilities is very, very wide. We just don't know, and I don't want to start speculating, as tempting as it is, because we really don't know. And we didn't know, by the way, in 2000 and I guess 18. Yeah, we didn't really know, and the range of possibilities very, very wide. We don't know what's going to be tariffed. We don't know for how long or how much. What countries? We don't know about retaliation. We don't know how it's going to transmit through the economy to consumers. That really does remain to be seen. There are lots of places where that price increase from the tariff can show up between the manufacturer and the consumer. Just so many variables. So we're just going to have to wait and see. And the best we can do is what we've done, which is study up on this and look at historical experience, read the literature, and think about the factors that might matter. And then we'll just have to see how it goes.
Courtney. Thank you, Courtney Brown from Axios. Two unrelated questions. The first is whether or not there was any discussion about QT and the timeline for ending QT at this meeting. And then the second question is just, I wonder if the AI prompted sell-off in the stock market this week signaled anything to you about the state of financial conditions?
So let's talk about runoff. So the most recent data do suggest that reserves are still abundant. Reserves remain roughly as high as they were when runoff began, and the federal funds rate has been very steady within the target range. We track a bunch of metrics, and they do tend to point to reserves being abundant. We do intend to reduce the size of our balance sheet to a level that's consistent with implementing monetary policy efficiently and effectively in our ample reserves regime. We're closely monitoring a range of indicators to assess conditions, and that should provide signals whether reserves are approaching a level that could be judged as, quote, somewhat above ample. I don't have anything to say to you about particular dates. It's just that's the process, and what we see is that rates do appear to be abundant. As always, we stand ready to take appropriate action to support that smooth transition of monetary policy, including to adjust the details of our approach for reducing the size of the balance sheet in light of economic and financial developments. On AI, it's a big event in the stock market and in particular parts of the stock market. I mean, what really matters for us is macro developments, and that means substantial changes in financial conditions that are persistent for a period of time. So I wouldn't put that label on these events, although, of course, we're all watching it with interest.
Simon.
Simon Rabinovich with The Economist. Thank you. You mentioned in your remarks that activity in the housing sector seems to have stabilized. At the same time, since your first rate cut in September, long-term mortgage rates have gone up by a full percentage point, back above 7%. I'm wondering, kind of looking forward, are you confident that activity will remain stable given how elevated mortgage rates are? How does it fit into your broader thinking about the economy?
So, as you know, as we've reduced our policy rate 100 basis points, longer rates have gone up, not because of expectations, not principally because of expectations about our policy or about inflation. It's more a term premium story. So, and it's long rates that matter for housing. So, I don't think I think these higher rates are going to they're probably hold back housing activities to some extent if they're persistent. We'll have to see how long they persist. So, we control an overnight rate. Generally, it propagates through the whole family of asset prices, including interest rates. But in this particular case, it's all happened at a time when, for reasons unrelated to our policy, longer rates have moved up.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you want to see further progress on inflation. Given that households appear to be unhappy with the elevated level of prices, do you believe the committee should wait until inflation has fallen back to target to cut rates again?
No, I wouldn't say that. We've never said we need to be all the way at target to reduce rates. At any time, what we're doing is we're looking at the economy and asking whether our policy stance is the right one to achieve maximum employment and price stability. So I think if we would want to see further progress, but we think our, as I mentioned, we think that our policy stance is restrictive, meaningfully restrictive, not highly restrictive, but meaningfully restrictive. And so I would think we need to see further progress. I wouldn't say all the way back down to 2% on a sustainable basis. Although we'd love to see that, of course, and we will.
And a separate question for you on tariffs. Curious whether the threat of tariffs and not knowing whether they could stick or not creates uncertainty for business here in the United States and could cause them to pull back, ultimately weighing on growth. Does the threat of tariffs cause you to ponder your growth forecast?
I want to avoid commenting even indirectly on the conduct of tariffs. It's not our job, and it's not our job to comment on the moves that people make. So I wouldn't want to criticize anything that's happening or really comment on it one way or another, praise it for that matter. It's just not our job. I do think that, we found in 2018, there was a lot of work done on trade policy uncertainty. Trade policy uncertainty, if it's large and persistent, can start to matter for businesses making investment decisions and things like that. That's not something I'm observing today. It's very early days for this, but I think that did matter in 2018-19, and it's one of many things we'll be watching.
Matt.
Thank you, Chair Powell. Matt Egan from CNN. Following up on Courtney's question from earlier about the stock market, how concerned are you, if at all, about potential asset bubble brewing in financial markets? How do relatively high market valuations factor into considerations about potentially lowering interest rates further? Is that something that's in the back of your mind?
So we look at, from a financial stability perspective, at asset prices generally, along with things like leverage in the household sector, leverage in the banking system, funding risk for banks and things like that. But it's just one of the four things asset prices are. And yeah, I'd say they're elevated by many metrics right now. A good part of that, of course, is this thing around tech and AI. But we look at that. But we look at how resilient the households and businesses and the financial sector are to those things. So we look at that mainly from a financial stability perspective, and we think that there's a lot of resilience out there. Banks have high capital, and households are actually overall, not all households, but in the aggregate, households are in pretty good shape financially these days. So that's how we think about that. We look at overall financial conditions, and you can't just take equity prices. You've got to look at rates too, and that represents a tightening in conditions with higher rates. So overall, financial conditions are probably still somewhat accommodative, but it's a mixed bag.
Hi, Chair Powell.
I
I'm
saw
Rich
something
Escobedo with
else.
CBS News. One question for you. This month's statement notes that unemployment is stabilized at a low rate and that the labor market is solid. You walked through some of what's driving this, but I wonder what risks you see that might challenge your assessment.
Well, the things we discussed earlier, one is that there's a low hiring rate. And so that if there were to be a spike in layoffs, if companies were to start to reduce headcount, you would see unemployment go up pretty quickly because the hiring rate is quite low. So that's one thing we look at. I think it's worth pointing out that for lower income households, they're under significant pressure. And in the aggregate, the numbers are good, but we know that people at the lower end of the income spectrum are struggling with costs. And really, it's high inflation for the basics of life. It's not so much the inflation now, it's the price level, because inflation has raised prices. Inflation is now much closer to target, but people are really feeling that. But, overall, this is a good labor market. You're at 4.1% unemployment. That's just a really good level, and you've been solidly there now for 6-7 months. And job creation is pretty close to a level that will hold the unemployment rate there, given that there'll be much slower population growth.
One more question. Some of the uncertainty around immigration policy is, in your assessment, is that making it harder for businesses and the Fed to plan going forward?
We hear anecdotal reports, but I don't see there's nothing in the data yet on that. But you hear that kind of thing about construction, for example, and businesses that are dependent on immigrant labor are saying that it's suddenly gotten harder to get people. But I know you don't see that in the aggregate data yet. But yes, you hear it anecdotally.
Nick.
Thank you, Chair Powell. Nicholas Jasinski from Barron's. The uncertainty is certainly a theme today. And I'm wondering, are there any periods from your career or as it relates to markets, the economy, what's going on here in Washington and beyond, or from lessons from history that may provide some guidance for a central banker operating in uncertain times like today?
I guess I'd say this. Uncertainty is with us all the time. It is human nature, apparently, to underestimate how fat the tails are in a way. The possibility, we think of things in a normal distribution, and in the economy, it's not a normal distribution. The tails are very fat, meaning things can happen way out of your expectations. It's never not that way. I wouldn't, if you think about it, think about the first few months of the pandemic. That was uncertainty. Are we going to be able to reopen the economy? If so, when? How much of it? How long will it take? That was uncertainty. What we have now is a good labor market. We have the economy growing at 2 to 2.5%. Inflation's come down to now the headline inflation number was 2.6, and that's what the public experiences. We look at core because it's a better indicator of future inflation. So yes, the price level went up a lot for inflation, and people are feeling that, and they're not wrong. But so the kind of uncertainty we have is just a usual level of uncertainty about the economy, but then policies which are not for us to criticize or praise, really. Those are policies which people have been elected to implement. They're implementing them with a view to making a better economy. And so I wouldn't call this out as one of those times. I wouldn't compare it to the global financial crisis or anything like that, given that we have actually a very good economy right now.
Evan Reiser with Market News International. Chair Powell, is a March cut still on the table? And then additionally, are you looking to see better than expected data on inflation to cut? Or are you looking for inflation data that roughly aligns with current forecasts?
So as I mentioned, the economy's strong, the labor market's solid, downside risks to the labor market appear to have abated, and we think disinflation continues on a slow and sometimes bumpy path. That tells me, and the other members of the committee, the broad sense of the committee actually is that we don't need to be in a hurry to adjust our policy stance. Your second question was?
whether or not you need to see better than expected inflation data or just inflation data that roughly aligns with your current forecasts?
You know, it's one of those things, we'll know it when we see it, but more the expectation is that we will make continued progress. And, you know, that's what we want. We'll know it when we see it. It's going to have to be something that isn't just idiosyncratic. You're going to want to see, you know, continued progress with housing services inflation. You're going to want to see inflation behaving in a way that builds confidence that we are really making progress. That's what it's going to be. And I mean, is that better than our expectations? If we expect to see that, it's just a question of when.
Chair Powell, Scott Horsley from NPR. In your 5-year review, you said the 2% inflation target won't be on the table. Can you talk a little bit about why? Is that because you think that's the right target, or is it because you don't want to move the goalpost mid-game, or what's behind that?
I think that goal has served us well over a long period of time. It's also the sort of global standard. I think that if central bank wanted to look at changing that, you wouldn't do it at a time when you're not meeting it anyway. I would not look at changing it anyway, but I certainly wouldn't look at it at a time when you're not meeting it. I mean, there's just no interest at all in changing it. If I'm being at all unclear, we're not going to change the inflation goal anytime soon.
And 5 years ago, if I can paraphrase what y'all decided, it was you're going to not raise interest rates preemptively to head off inflation until you see sort of the whites of the eyes of inflation, because the solid labor market was so beneficial. Have the last few years changed your thinking about that?
So what we really said was that we wouldn't look at a strong labor market and raise rates unless we saw some evidence of inflation. So the thought was that we'd seen really low levels of unemployment with no sign of inflation. So why would you preemptively want to put people out of work in the absence of any kind of any evidence that suggested that this was not a sustainable level? It was a way of acknowledging how much humility we have about the starred variables, especially U-star, the natural rate of unemployment. So that was that was an insight. We'll discuss that again. That'll be one of the many things that we discuss. But I don't think that insight is wrong. We didn't, you know, we said what we said was that you know, at times when inflation persistently undershot 2%, we would likely allow inflation to run moderately above 2% for some time. That's what we said. That turned out not to be relevant to what actually happened. There was nothing moderate about the overshoot. It was an exogenous event. It was the pandemic, and it happened. And you know, our framework permitted us to act quite vigorously, and we did once we decided that that's what we should do. The framework had really nothing to do with the decision to. We looked at the inflation as transitory, and right up to the point where the data turned against that. And when the data turned against that in late 21, we changed our view and we raised rates a lot. And here we are at 4.1% unemployment and inflation way down. But the framework was more irrelevant than anything else. That part of it was irrelevant. The rest of the framework worked just fine as we used it, as it supported what we did to bring inflation down.
Go to Mark for the last question.
Hello, Chairman Powell. Mark Hamrick with Bankrate. As you know, in the annual report from the Financial Stability Oversight Council, among the risks outlined is cryptocurrency. Could you talk about those risks now? And regarding individuals and households, perhaps distinct from the concern about the financial system, do you worry that speculation in this unregulated asset class could hurt their financial well-being, or do you think it has a place
Let the boys
in
play.
households' portfolio?
You know, so our role with Bitcoin really is to look at, with crypto, really is to look at the banks, and you know, we think it's, you know, banks are perfectly able to serve crypto customers as long as they understand and can manage the risks, and it's safe and sound. As a good number of our banks, right, that we regulate and supervise, do that. You know, the threshold has been a little higher for banks engaging in crypto activities. And that's because they're so new, and we don't want to make the mistake. If you're making a choice to conduct that activity inside a bank, which is inside the federal safety net with deposit insurance, then you want to be pretty sure that it's a safe and sound activity. So, we're not against innovation, and we certainly don't want to take actions that would cause banks to terminate customers who are perfectly legal just because of excess risk aversion, maybe related to regulation and supervision. So.
And with respect to households and their inclusion in asset finance?
That's kind of it's not really our bailiwick. You want people to be knowledgeable about the financial engagements that they have, and that's why we have the securities laws that we have. It's why if you read a mutual fund prospectus or individual stock prospectus, you want households to have the chance to understand the risk that they're taking. And I do think it would be helpful if there were a greater regulatory apparatus around crypto, and I think that's something Congress was working on quite a lot. We've actually spent a lot of time, with members of Congress working together with them on various things, and I think that would be a very constructive thing for Congress to do. Thank you.
All righty, ladies and gentlemen, that was a very interesting FOMC meeting. So, if you think about kind of what we were talking about, with the most important things that we needed to be aware of was obviously his thoughts on the labor market. Now, if you guys were paying attention to everything that I've been talking about over the last month or so here, ever since we got that last FOMC meeting minutes, it was they're way over kind of analyzing this tariff situation, and it was a little bit of breath of fresh air there to see Jerome Powell come out and be like, yeah, we're just going to wait and see. Which they could have said that the last time, but apparently they wanted to shake up markets a little bit for some reason. So then when we move on to the labor market a little bit there, he did say that inflationary or the unemployment rate is not providing inflationary pressures. And it's like, well, duh. I think they're still kind of a little bit too optimistic about the labor market here. And Powell even said it himself that if you are able to see or people having jobs, that's good. People are going to keep their jobs. But when people lose their jobs, it's really difficult for them to get new jobs, which, all right, if you're going to see all these government employees no longer having jobs, what do you think is going to happen? So I still think we're spot on with the thesis. You did see yields pop back up. They are starting to move back to the downside there. RKT's moving back up. Nike's holding really well here. DraftKings is looking very interesting. Team. Oh my God, it's been a long day. Let's see how this market reacts. It's coming up a little bit here. But yeah, again, guys, remember, everybody gets 50% off their first month to the private mentorship community. You guys kind of heard a little bit of the type of analysis that I provide for you guys every single day. And again, I'm just going to keep providing you guys with that FOMO on Twitter and Instagram and the YouTube community posts being like, hey, look at all these multi 100% gains that you're missing out on by not being in there. So again, remember, prices are going to be going up at the end of February. Make sure you guys secure and lock in that lower rate before then. Again, right now, your first month is literally only $1 a day. It's $59 a month. So, what else? What else there? Yeah, so we'll be back live, publicly for you guys Friday. So you guys are going to get that on Friday, another public live stream. So I'll just throw the link there in the live chat for you guys too. Just check out the link. I only have 5-star reviews for a reason. But yeah, I mean, guys, it's going to be a very, very, very fun rest of the week here. We do have big earnings coming up after hours here too. Facebook, Apple, Tesla, I believe. So we got a lot of them that are going to be interesting. Oh my God, we're 1 like away from 100 likes on the stream. Thank you guys. Who's going to be lucky number 100? But yeah, I'll see you guys in the Discord again. Once you guys start going through both those educational courses, you attend the private live streams, just ask me questions. That's what I'm here for. I mean, I'm always available for you guys. No upsells, no nonsense, just the best trades in the market. So, FOMC was kind of a dud. That was kind of what we expected there. We'll see how the market reacts to earnings after hours today. And again, if you guys haven't watched that post-earnings strategy video that I posted for you guys yesterday, make sure you guys do, because tomorrow is probably going to be the day that you want to use it. So yeah, I mean, that was where the Starbucks trades came from, the 500% RCL trade from yesterday that I handed out, the 300% AT&T from last week. But team, I'll see you guys later. You guys have a great rest of your evening. I don't think we're going to do a YouTube video tonight just because we already did this. It's been a long day. I got to go to the gym. I'm tired. Maybe though. Maybe you'll get like an Instagram video or a TikTok video, or maybe if I'm feeling crazy. What's my Discord? I threw the link to join right there, ADD in the live chat. It's the WAP link. So all you got to do is sign up through there, connect your Discord to your WAP account, and it'll automatically let you in. So there you guys go. But yeah, make sure you use code TRADE for 50% off your first month. That'll be a deal for, we'll probably leave that deal going until I raise prices. So, all right, guys, I will see you guys later. Have a great rest of your day. Peace.